I'm 20 years old. I've been trading around ICT concepts. I've been trading around over 1 year in the futures markets, just a couple of months, to be honest. I've been looking into different concepts since actually seen in an old journal the other day, late 2023. So yeah, I've come a long way and the spaces are helpful, but I've got a couple questions here today, bro.
Go ahead.
So regarding this new, because I'm going to start here, right? This new first sorry, brother, I've just got to word it correctly. First utilization of the fair value gap, right?
Yeah, first utilization. Yes, sir.
So today, is it helpful if I put a chart? It's from today.
It could help potentially. Yes, sir. I don't know where you're going with the question, so it's hard to say. If you have questions in regards to technicals where a chart would be advantageous or beneficial to the conversation, pretty please add that to the
Yeah,
comment
sweet, for
section
sure.
for us, because then it makes it much easier to accompany the convo and we are efficient with people's time.
I mean, I'm not sure if you can see it. It's just a screenshot of so the one I'm talking about is the black highlighted box there, right? So that's the 925 1 minute suspension block.
Okay, I see your chart. I had to go at the very top. It said relevant. I had to change it to recent. And then the view activity on the right, I scrolled down. You were second down 29 seconds ago.
It's like a mobile app screenshot.
Yeah, no, I can see it, but can Michael?
I'm looking at a NASDAQ chart. Yes, it has a small, what looks like a gray box highlighting
Oh,
around
yeah, that's the one,
27,000.
brother.
Yes, sir.
Okay.
Yes, sir.
Okay, go ahead
Okay,
with your question.
so I've managed to get like the words together now. So this is like pre-market open, right? But I've got my eyes on this gap here. It originally serves the purpose of an inversion. Then we sweep the liquidity from 914, and then it acts again as an inversion and then taps into it again. I guess where I'm going with this is the first utilization of a fair value gap, of any sort of gap. Is it like, is there some sort of, what's the word, intricacy to do with whether it acts as an inversion or whether it acts as a normal gap? Like, could that give us more insight in like knowing what its first utilization was? Or would you say I'm reading too far into it?
No, one of the benefits of having a target, okay, a draw, it doesn't necessarily mean it's going to be your session bias. It doesn't necessarily mean it's going to be the daily bias, but whatever you're aiming for, that target, that has to be the draw. So if you have that predetermined before you start looking for setups, when these fair value gaps form, for instance, say you're looking for sell side like I was today. Anytime we see a bullish fair value gap, the first utilization characteristic of that is that of if it trades above it and comes back down, one would reasonably expect it to be acting as a discount PD array to send price higher. But I would look for that to already, as soon as it starts booking and closes, once I have that in the chart, all three candles are there, I know that that's likely to be a factor to get short on once we trade down through it and come back up. So it definitely does. That's what's the whole purpose of having first utilization understood. Because once you know where you're likely to draw to, every contrary PD array that would send price against that with its first utilization all become inversion.
So we're kind of looking at it from the perspective as where is the draw? Where is the session draw, the higher time frame draw? Not necessarily, it's not so salient because it's acted as an inversion or it's acted as a normal SIBI. Is that like the sort of thing? It's all about our draw on liquidity, basically.
As the first teaching that I taught, yeah, that's the most important thing. Know where it's going to go to next.
Yeah, so even if it's acting in several ways, inversion, back to a normal function, inversion again, that's useful to us as well, right?
I'm not sure what you're trying to say there. Like,
oh, because this one I highlighted on the chart, firstly it was inversed and then it was used later again. as an inversion, and then later
Well,
again.
the one you have highlighted, if I'm looking at it correctly, and forgive me, I have old eyes, so
Oh
that
no, that's
darker
fine.
gray, that's a sell side imbalance buy side efficiency, correct?
Yeah,
That's what you're highlighting. Okay. So
that's the
normally
one.
that the first characteristic for that would be bearish if it trades up into it. Once it trades
To
down
draw is
into it
lower.
and then and it does behave that way. But then we see it go above it. I can't see the time when it does it.
Would that be 9:35?
Yeah, I wouldn't be able to pull it out on your chart, but you know what I'm talking about, where it goes back
Yeah, yeah.
above it, and then it utilizes it as then an inversion fair value gap around 27,015 ish, and then sends it higher. So whatever the first characteristic it shows at formation, a down closed candle, which is a SIBI, that's always utilized first as a premium rate. You have to give it a chance to do that. But when it's opposing, for instance, if it was a sell sign imbalance, buy sign efficiency, if it's opposing a draw on liquidity that you think is going to go higher, the market's going to reach for something above where it's at right now, then you would expect it immediately to fail as a bearish one and then go into inversion that's bullish.
So I could forecast these inversions as well.
That's all I'm doing.
'Cause
Yep, that's all I'm
sometimes
doing.
I see myself doing that, and I'm a bit hesitant to get in, but then I'm like, oh goodness, you did it. You forecasted it.
It's all tape reading. That's the benefit of doing that. You'll desensitize yourself to that fear in the outcome. And it becomes like a flow state. You see it, you know what's going to happen. If your draw is correct, it's just a matter of just waiting for it to be there. And when time and
Hey,
price meet, you got to trade.
that's what the orange boxes are for, right?
Yep.
On the yeah.